If Jerome Powell steps down and the new Fed drops interest rates drastically, what do you see happening from that alone? The market typically goes up on rate decreases. You're correct. When they lower interest rates, there's more liquidity, people borrow more money. You tend to see a move to risk on when interest rates drop. People refinance homes, they pull money out. There's a bunch of things that happen when that's the case. The other dynamic at play here is the reverse carry trade in Japan. And we're walking a line. So the reason that they're holding U.S. treasuries there is they pay a higher yield than Japanese treasuries do. Well, if we see a rate hike there in Japan, you'll see a rotation, especially if we lower interest rates aggressively like Trump wants to, 3% down to 2%, and Japan raises their interest rates 0.5% or 0.75%, you'll see a rotation from the $1.6 trillion in treasuries that Japan holds, swapping out of those U.S. treasuries and buying their own treasuries, chasing yield because they're going to get more money to hold those versus ours. So that's the line we're walking here. And when that happens, you're also going to see a bunch of loans come due. There's going to be a global credit call on the treasury market, bonds, stocks, gold, crypto, all of it. Every market will plummet. It's not going to matter where you're parked. You're going to get hit. I don't think it's going to last that long. I think it's going to be a V bottom. I think you're going to be fine. I think the stock market goes up and to the right for the next decade after that sharp decline, similar to 2020 type deal. Big move to the downside in the short term, and then rocketing higher on the other side of that with the advent and addition of all these progressive technologies, removing frictions and inflation from the economy.